Hey everybody, hey traders, happy Tuesday. Welcome to the final hour. It is just after 3 p.m. on the 28th of January. We have some earnings coming up this week. We'll take a quick peek at those. I priced in some plays today on Tesla, on Meta, on Microsoft, on IBM. Put a play on NVIDIA as well. Markets are just creeping and crawling back up for a gap fill today. They did make a nice little run up through this high from yesterday. So this is an intraday high. We had the gap lower where the markets were caught off guard, blaming DeepSeek and whatnot. But really, it was more Japanese yen, a little bit of deleveraging. It's interesting. Like we had, the last maybe 30 days, you could see some transitioning away from Mag 7 and broadening it out a little bit. And then you look at today's heat map and you're going to see it pretty much all push right back into the Mag 7. So, I mean, we'll look at the advanced decline line here in a moment. But you have Amazon up, Meta up, Google up, Apple up, Broadcom, NVIDIA up, Microsoft, Oracle. I mean, a lot of tech plays on the comeback. We'll take a look at our major indexes. Market is up. S&P is up around 0.9%. Nasdaq's up 1.57%. That's QQQ. NDX up 1.63. Equal weighted up 0.4%. Equal weighted S&P down 0.4%. Dow is still up 1/3. Russell growth is back up on the rip. I was tempted to buy some shares of that yesterday, but I didn't. I'm looking to see if we pull back into the 222 to 220 area. Well, so be it. So anyway, markets, SPX, just a little bit within that all-time high. Let's have a look at our advanced decline line today. So we have only about 48% of stocks advancing, 48% declining, a lot of chop. New highs, not very many. We got 57% new highs today. We're back up to around 50%, about 51% of stocks above their 50-day moving average and 56% above their 200-day moving average. But the advanced decline line is essentially a wash. So obviously we have some green and some not green, but moving the markets up, being up 0.9 and 1.3, 1.4% on the S&P and the NASDAQ is attributed to the good old Mag 7. And earnings this week, we have earnings on Tesla, which is tomorrow after market. We have earnings on Meta, which is after market. We have earnings on Microsoft, which is after market. These are all Wednesday. Thursday, we have Apple after market. So let me go into my, hang on a second. Relax, bro. Oh boy. Let's go into earnings today. So this morning, Boeing, which did push to the upside, Royal Caribbean pushed to the upside. JetBlue was down. Cisco is sideways. Kimberly-Clark, this was today before the market opened. And after market today, we have Starbucks, Chubb, which is insurance. That was the two that I was really watching. Progressive tomorrow, which I have a ratio spread on. T-Mobile, I opted not to trade T-Mobile, although I like the stock itself. I mean, fundamentally, it's pretty darn strong. But I'm taking the more cost-effective approach with AT&T, so my ticker is T. And I did some cash secured puts and a long call out for a leap, essentially. So I've got some profit on that one. I'm already up $300 on T. We have NASDAQ Wednesday after before market open, but the big ones, again, Tesla, Meta, and Microsoft. IBM, I did actually put a pending order on IBM. And I think that's it. The IBM didn't get filled yet, but Microsoft and Meta and Tesla, I'm in all those trades. I will also price out some trades tomorrow I'll evaluate them. I mean, Southwest might have a big pop. The airlines have been pretty volatile. Caterpillar may be something if I just like how it plays out mathematically. UPS is always an interesting one where it's also a good gauge for the consumer. Same thing with MasterCard and Visa, which is before market, after market. Apple's a big one after close on Thursday. Intel after market on Thursday. Baker Hughes in the energy space. You have ExxonMobil, Chevron in the energy space. Colgate, Palmolive for defensives. Phillips 66 for energy. Charter for telecom. So, I mean, it's a pretty big week. When you throw in Mag 7, it's enough to throw out some pretty serious market cap and get the market moving a little bit. So, depending on how our earnings do, right? I mean, look, I think that the market is still eager to toss money at a lot of things. We had a ton of volatility on Tesla right after the election. We pulled back a little bit. I could see a pop on Tesla pushing a decent amount. I think I priced it out today Market makers on Tesla are looking at something around a $35 move. I think I priced in about a $40 move. Let me check that. So if I go to Tesla, and Tesla average is 16, but I saw a lot in the 10s. So I played mine at 10+%, 10 to 10.5%, and that gave me around a $40 move or so. So we're trading at 396.64. If I do the 10 to 10.5 earnings, I'm looking at about a $40 to $41 move. So I priced it into my options play, and I'm looking at a bull put spread to the upside and a bear put spread to the downside. If I lose one, win one, I still walk away with about $1.40, $1.50 net profit per contract, and that's not too bad. We have had some moves on Tesla, like 7 out of 10 times or 8 out of 10 times these last earnings prints, they've all pushed at least 10%. So that's where I priced it. Obviously, I'm hoping that we have another kind of explosive move with Elon Musk being so close to the White House and so close to the power play that maybe we get a pop up here for $40 to $50. Maybe we get a pop down here for $40 to $50. Maybe it's a blowout move like Netflix was, and it moves like 1.5 to 2 standard deviations, and it's way up here, way down here. I don't care. I just want to see if I can get an earnings play. And then as far as the position, if we go down, I do have some dollar cost average levels that I will be buying some shares. I also have some ratio spreads out here where I'm still willing to own some shares of Tesla. But if we go up with positive earnings, I could see us coming back into like this 450 handle, and maybe 450 to 460, but not necessarily getting all the way to all-time highs. But we'll find out. If it does, it does. If it does, it's easy. It's an easy winner. So I've got a couple trades there on Tesla. Also on Meta. Meta hit all-time highs despite the little chaos yesterday. I mean, this is a pretty big move already. I mean, we've had a 624 to 6. We had a $50 rally already, and we're not that far off. If we have positive earnings on Meta, this hopefully is another like $30, $40, $50 move to the upside. And let's see what earnings can give us. But Meta out to Friday. Friday's move on Meta, looking about a $48 move. So if we have another $48 on top of this, that puts me up into the 710, 715 handle. I need price to be greater than 702.50 to make money on the call side. If price is below 620, then I make money on the put side. But we're already showing some good momentum. Meta probably is in a pretty strong cash position. I would imagine they would beat earnings on top and bottom estimates. So if that's enough to get the market excited and pump some more money back into Mag 7 being Meta, then hopefully we're back above the we've had this before. I mean, this was a huge move on Meta, well above the standard deviation. It did pull back and try to find that gap a little bit, but that was a good buying opportunity. It's been holding in this trend ever since. Now, we have a really high bar count on Meta. If we push higher and gap higher, I could see a push higher, gap higher, ultimately getting faded for the next maybe 30 to 60 days. But I can look at that trade after earnings. Okay. Yep. I checked CB. I'm not doing anything fresh on CB. I already have trades in it. We're trading at 273. I've got a trade out to May. It's a 1-1-1 strategy where I've got a 225 by 220 by 215. Collected $2 of premium on that one. This is a stock that I'm also willing to own. PGR, I took a similar trade on this one. I don't have as much distance away on PGR like I do on CB, but I have a 230 by 225. This one's out to February 20th. We have earnings. It is today after market. Is that right? Yeah, today after market, or was it this morning? Let me double check. Progressive should be tomorrow morning. It shows the 28th, but that's weird. So I don't see anything from earnings right now, like a reaction today, but earnings should be tomorrow morning. It's just not popping up on my chart with a little sunshine indicator. So, but what I see here, Progressive, I will highlight this one as well. And that should about do it. Let me take a look at Caterpillar right now. Southwest and Caterpillar, like to see those. Visa, MasterCard, I took a trade on those during December, got out some profit. I'm not going to earnings play those. Let me see what Southwest and Caterpillar look like. So Southwest is LUV, trading around 31.88. If this was a negative print, I'd be pretty excited to scoop up this trade around the $26 to $25 level. Set a chart alarm here at $26. Look to buy. If we break the recent highs at 36, then okay, I guess I missed out. I could look at the expected move. Let's see how often we have gone above and below. Average move around 7.76%. I've got 4, 5, 5, 6, 6, 6, 6, 7, 6, and 7. I think a 6 is fair, a little bit conservative. Now, this doesn't get me super excited, especially if the spreads are not like 50 cents wide. So LUV spreads. All right, so I've got 50-cent spreads, which is good. I've got at least some precision in there. But we're only expecting about $1.50 to a market maker move. And based on my earnings, around 6% or so. If I conservatively did like a 6% move, I mean, a 6% move on a $31 stock is not that exciting. So I'm looking at about $1.90 on earnings. I don't care how precise this move is. I mean, the only way I would consider trading this would be the cost effectiveness of, okay, trading at 31.89. If I buy the 32 and I buy the 32 and I sell, I mean, so right there, you can see what the premium is being charged, right? If I just did an at the money long strangle, I would have to pay $1.77 for a market maker move of $1.52. And what I'm conservatively calculating out to be about $1.91, right? What do I say about about 6%? About a 6% move on a 31.89 stock, about $1.90. If we had a bit of a surprise, 6.5%, ooh, big move, 31.89. May I get a $2 move? So could I sell 32 and then sell 32 and 34? Could I sell? I mean, for $1.34, I make 66 cents. It's like, that's garbage. I'm not going to take that trade. So never mind Southwest. I'll just keep an eye on this one. What's looking a little bit more attractive might be Caterpillar, depending on the volatility here. IV at 35. Let's go to Caterpillar. And we have about a 6% move. So 5, 7, 6 and change, 6 and change, 7, 6, 7, 7, 6. That's fair. I think 6.37 is the average. I'd say that's a fair percentage. Now, how many times do we at least get 6%? Post earnings, how many times do we at least get 6%? I'll go out 8 days. 6% we get at day 8. I'm just going to cross that one off because I don't like to wait that long. 6% at day 3. That one checks the box. This 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 one does not. This one does day 3. 6 it does. And close. 5.82, 5.76, but not there. 1, 2, 3, 4, 5, 6, 7 out of 10 is not too shabby for at least a move of 6%. So let's take a look here and see. Number one, we have 250 spreads. We're looking at about a $17 move. Let me price out earnings. Let's see here. Let's go to earnings history. About 6.37. So 0.0637 times current price is Caterpillar trading at 390. So times 390.68. So I'm looking at about a 24.88 move based on past earnings history with an expected market maker move around $17. So if I can price this one out, it's fair. I'm looking at around a $24 move. Market maker's around 17. If I go, let's say 15, we're trading at 390. If I look at a 405, okay, a 405, I can make 250 on this trade to only pay 67 cents. It's not awful. Maybe cheaper. That's right at the expected move there. And then on the downside, if I went around, I said around 15 bucks, right? Yep. So let's go to 375. If I buy that, sell that. So for $1.10 to $1.15, I can still make profit on one side or the other if we at least hit an expected move. Let's see what the strike prices look like. So Caterpillar on the daily time frame. So I wonder, maybe there's not enough movement to say, okay, Caterpillar's on Thursday. If I take the trade out to Friday, that might not be enough time. I might have to take this out to the Feb 7, which I think I'd rather do if it's not too much more expensive. Let me see what a 405, try this trade here. If I go to 405 by 407.50 and a 375 by 372. So it cost me $1.30 basically to make $1.20. And I can lose one trade and win one trade. I don't have to wait all the way to profit. Obviously, I can try to get this thing for $1.30 debit, try to close it out like 225, 230, 240 credit. But I'm looking to see if price will go greater than 407, 407.50, and less than or less than 372.50. So That's not too bad. I think this is fair. $20 market maker move. If we have an earnings play that pushes with some follow through, maybe we get there. I'll look for partial profit. I'm going to take this trade, see if I get filled for $1.30 or less. Let me try $1.25. $1.25 on Caterpillar. Not filling. Let's try $1.26. I'm going to try to get a little bit under the mid price if possible. I may or may not be able to take this trade, but $1.30 should be filled. I don't really want to take too much more than $1.30. Ideally, it'd be $1.25 or less. But let's see, $1.29, $1.30 final offer. Make me get the bid price. Come on, Caterpillar. $1.31. Not filling. All right, final offer, $1.32. Fudge it. Canceling the trade. Well, that sucks. So let me price it out this way. If I buy the 392, buy the 387, and then I'll sell, let me sell like 20 bucks higher. 20 bucks higher, 87 to 67. I don't like that trade either. So I'd have to pay $13 to basically make $20, which gives me a net 7 and change. If I peel this down a little bit, that's $17.50, $17.50. So I pay $11.70 to make 5. I don't love that. Nah. All right. Well, that sucks. Yeah, I don't like the trade. If I can get filled, I want to get filled, but I'm not going much higher than the mid price. Okay. All right. So that's where I'm at for some of the earnings plays for this week. Exposure on Tesla, Meta, Microsoft, pending order on IBM. Progressive, I've got a ratio spread in. Chubb, I've got a ratio spread in. Those are looking fine. Let me highlight that really quickly. I tried to price in Caterpillar, didn't like it. Tried to look at Southwest, didn't love it. I'll look at SkyWest, though. SkyWest, Intel, Apple, Visa. Maybe I'll take a quick peek at those. So let's go to Apple. Okay. Apple has earnings Thursday after market, so expiration-wise, most likely I have to go out to February 7th. Looking at about 11.50 market maker move, and Apple is trading back above 238. So are we able to get back up to the highs? Are we going to give some of this back? We bounced beautifully off that 200 moving average on the daily time frame. I looked at that as a really good buying opportunity, which is why you see my trades down here. So I have a ratio spread, the 205 by, or the 210 by 205 and the 195 by 190. Most likely I will not have any assignment. I already own some shares around the 160 handle, and I'm still holding those with covered calls at 225. So I've got a good chunk of profit lined up on Apple that I'll continue to kind of roll out and get some more premium on it and just kind of increase the profit potential. But the rest is just income trades. So March and April expirations with ratio spreads. We're right back in the middle, so it makes some sense going into earnings. Like, this is a coin flip. Are we going back up to highs? Are we coming back down to lows? Are we going to stay in between? It's just a big like volatility drain and a bunch of chop. I don't know, but I'll price it out and see what we have. Okay, Francois, doesn't matter. I'm not going to take the trade, so I don't have any expectations. What I will look at though is, do we have any big levels on Caterpillar? Right now, I would say to the upside, Caterpillar is likely looking more bullish than bearish. So I would look at, like, price moving from 390 to 400. I could see, yeah, I mean, I could see that happening. So maybe actually it might be more cost effective on this if I go Caterpillar, go out to Friday. If I buy a 392.50 by 395, I pay $1.23 to make $1.27. This one is a little bit more reward to risk, but I pay $1.30 to make $1.20. I'm going to take this trade. I'm going to put this in for my double up alerts. So 390 by 392.50, I pay $1.30. If I want to go one strike out of the money, I pay a little bit less, but to me it's worth. If price doesn't go anywhere, I can still make money on this trade. I need price to basically move up about $1.12 as opposed to moving up, $3.80. So I'm going to take this trade here for less than $1.30. Let me see if I can get in here for $1.27. $1.27. Come on, cat. Be freaking liquid, would you? $1.28, not filling. I don't want to take more than $1.30 again. Like, come on. $1.29. Okay, I'm going to add that trade in. So 131 expiration. Buy the 390 call. Sell the 392.50 call. $1.29 debit. Cat has earnings on Thursday. And that liquidity level that I'm watching is a pretty big one here at 400 and another one all the way up to 412. So 400 and 412. Looking for let's say 240 credit or higher for profit. And then max credit equals 250. So that trade is going to get posted. I'll add this in. So 57 cat, today's the 28th. 131 expiration. We're doing a buy 390, call, sell the 392, 50 call, got in for $1.29 debit. All right. LUV. Don't really love that one. I want to take a look at Apple. Apple had some pretty big flows today, and it's already rolling up into my market maker levels. So I'm going to stay out of Apple. That was a really good, I mean, you can't really do anything intraday outside of a Friday expiration, buy the short-term Apple call, and it works out. I mean, you got a $9 move today, which is heading right up into this big liquidity level at 240. But going into earnings on Thursday, I mean, I don't have anything else. So we either just have price up, price down, but market makers are probably satisfied with that level getting hit. They've properly hedged, and now it's either they look to defend or there's more of a liquidity hunt to the upside. I can price it out, though. I'm curious. I mean, we're going to have some catalyst on Apple, whether we're going higher or lower remains to be seen, but I'll move this down to fresh lows, and we'll go back up towards highs. So I'll get rid of that alert and post at the lows and the highs. Apple from this standpoint, let me check on an Intel. Got a couple more levels I'll take a look at. Intel at 1985. Market maker levels are back and forth between, it's pretty equal on this one. I wouldn't trade Intel unless I will actually look at this stock on Thursday. It would be Friday morning, because if we are on Intel and this thing comes down to about $18, I'm going to look to get a bull put spread or bull call spread off of that. I think that's a good way to defend it, looking around $18. If we go to the upside, then 2050 to 22 looking like some defense levels. But in the middle, it's like there's no trade there. There's not going to be enough premium on like an iron condor or a strangle, especially if we have more than expected moves. You just get stuck in terrible trades that way. So I'm just going to wait. If this was no direction here, all upside, then I'd be long, similar to what I saw in Caterpillar. We go to Visa, MasterCard. MasterCard, same type of thing. Today gravitating towards, I mean, that's a pretty big level there, around 555. Visa, interesting. Maybe around 330. I'm not taking this one directionally, though. We've already had a pretty wild run on those. So if you look at Visa, I mean, I feel lucky that I grabbed a bear call spread where I bought a put and I sold a put, and I think I paid $1.95 and I closed it out for $3.75. I didn't take the full profit. It would have been close, but I don't know. I think I put that expiration out to like 12/31. So I took a majority of the profit there, but man, what a crazy rip that's been since. So let me have a look here. I got to add in a meeting. Got it. Okay. Visa up, MasterCard back up towards the highs and actually blew through them. That was the bear call spread that I took profit on. And now we're up to all-time highs again on MasterCard and Visa. AXP for American Express, same thing. Recently hit all-time highs. We didn't go throughout. I looked at this earnings play last week when it reported. Did we get to 338? Nope. Did we get to 298? Nope, not even close. We stayed right in the middle. So that's the only potential downfall with earnings. And it depends on your strategy, right? Some traders like to sell premium on earnings and see if it stays in a contained move. I tend to think that directionally, you're more often getting surprises in earnings plays than you are not. So I tend to trade like cost effectively, looking for, if there's a probable $20 move and I only have to pay like $10 or $11 for that move, I'll take that trade. Where I do like the out of the money spreads and I pay way less and I can usually return, higher reward than risk. That's a pretty cost effective way to trade it with no assignment risk. Okay, cool. All right. So new trade on CAT, new trade on NVIDIA today. And let's see what else. Other earnings. I want to price out. So Apple, I'm kind of over it. Let's look at Intel. Didn't love it. MasterCard didn't love it. Baker Hughes is BKR. We're sitting right at that big level today. Let's see here. Doesn't really have anywhere to go. Earnings on Thursday. Maybe some defense levels there, but I'm going to hold off on that for right now. We have SkyWest. This one might be a good one to trade. Trading around 114. I've got some ratio spreads in. We are running to some market maker levels around this 115 to 120 handle. This one I'll probably just look at after earnings because if we go up after, let me check this out. If we go up after earnings, I'll probably look to fade that. If we go down, then I'll probably look to buy it. I already have some ratio spreads in where I would own this around like $85. I think this one is a bit overvalued, but if I take a look at fundamentally for SkyWest right there, it's not super expensive. 18 price to earnings, not awful compared to its peers. Fair value, way the heck higher. And compared to pure average 15, it's at 18. But we got Alaska Air at 22. We've got American Airlines at 13.4. JetBlue, who knows where the heck that is? That price to earnings is probably terrible because they suck so bad. I say that because I own their shares. But they just can't get off. They just, no pun intended, but they can't get off the ground. 0.3 price to earnings. No fair value attached to it. They kept having that. Was it JetBlue and Spirit? Was that the merger that kept failing? Right, like that was the big talk. Is like JetBlue and Spirit are going to merge, and stocks were pumping up a little bit, and then both of them just went into the toilet. So anyway, I still have some shares, and I'll sit on them a little bit longer. I guess there's nothing else to do other than see if they pop at some point. But anyway, that's that. And then let's go to ExxonMobil. XOM at 108. Pretty good play in the middle. So in the middle, back down to support or back at resistance. We're trading at 108. Let's see what this one prices out to look like. If there's any type of liquidity level, I'll watch that as well. I see a big level. Ooh, that's not bad. That is not bad. I don't think it's enough to take the trade, though. Earnings is a bit of a coin flip, but I could see earnings being positive. My concern is that, energy related, oil was up and then oil has dropped aggressively. So I don't know if their, guidance and transcripts is going to be somewhat negative. I see this getting up to like 112 or higher. I can price out and see what the move would be. Obviously, a $3 or $4 move is not that exciting. But to the downside at, 105, it's Friday as well. So, I mean, it's coming out before market on Friday. What I could look at could be either we go down, I look to buy that for a gap fill, or we pop up here and I don't know. It's not awful, but I think if this was a little bit more faint, if this was less pronounced on the downside, then I would be likely taking that trade up into 111 or 112. But I do want to price it out really quickly. Chevron next on mobile, so CVX, same thing. Dude, I just put you down. What are you doing? CVX is pretty evenly distributed, so I'll definitely stay out of that one. XOM, go back to this for a moment. So 112, is that worth a trade? It's doable. I mean, XOM. Let's go to Friday expiration. That's a little gutsy. We expect the move to be about $2.51 if I buy and sell 50 cents to make 50 cents. If we get up to that strike price around 112, it's outside the expected move. I mean, we're trading at 108. That's a $4 move on a 250 expected move. So I don't know. I don't think that's just not enough movement. I'm going to pass. It's Friday. I'm going to pass. Phillips 66. What's that one? PSX. This one, little bit more volatile, but not much. Just under $4 move. Let's have a look at the stock here. Yeah, I mean, a bit of a corrective. Looks like a lot of correction going on here. I don't know if this is time to like jump into a lot of energy plays. So speaking of energy, I do have some exposure on XLE, which hasn't turned back a ton. So, I mean, I've got the March 31st, 83, 82, 81. Just did some cash secured puts. I'm willing to own the sector. I think this is a good diversifier to have this year. Whether or not we're doing, AI play, if it's AI energy and it's utilities and it's wind, it's solar, it's nuclear, it's whatever. If it's oil, okay, fine. But if it's other stuff, I mean, you're still going to have XLE sector hopefully doing well with some type of infrastructure play where things are being built out to, improve the energy grid. I mean, you're looking at basically anybody in AI is like the U.S. needs to unleash energy in order to build AI and be a leader in the industry. Blah blah blah. Maybe it happens, maybe it doesn't. But XLE is a good diversifier. Correlation wise, it's lower beta than the S&P, and it's like 0.2 or 0.3% correlated. So very, very low correlation, which I'm happy to have that in the portfolio. All right, I think that wraps it up for earnings. So we'll see what happens tomorrow. Progressive in the morning, Tesla, Meta, Microsoft, IBM, and that's about it for right now. And then Thursday, I don't really like anything. UPS, actually forgot UPS. UPS has had a pretty nasty spill. Right back into really good resistance, though. Let me see if I missed directionally that little pop to the upside. So UPS is not awful. Not awful. I wonder. I mean, looking at this stock, though, it's like, do I think this has what it takes to get up to, let me look at the price here, $140? We're trading at 135. Can we get to 140? I mean, we've had positive earnings, but man, this stock just doesn't do well. Positive earnings, even here, it's like, okay, let's zoom in on earnings. So earnings didn't do anything. Earnings fell. Earnings rallied a little bit, but not much. Earnings fell. Earnings fell. Earnings up a little bit. Like, I don't love it. So I don't know. I'm pretty picky when it comes to trading earnings. I want like a high volatility play, one that is maybe prone to go past the expected move. IV's pretty high, which is good. Like, would I take? I mean, FDX is probably better positioned than UPS, but I guess my question here is, if we go back to March 2020, that's COVID, could I own some UPS around like $95 or $85? IV's high enough that maybe I could. I'd have to go out to probably April or May for this trade, but I could put a ratio spread on if the premiums are decent. So if I went to April, that's out 79 days. Premiums are absolutely garbage. So never mind. If the premiums were better at like what strike did I say? If we came down to COVID lows around $90, I would do something there, but $90 offers like a zero bid. So that's not going to work. Never mind. FDX, way more expensive. Probably looking better from the trend perspective. FDX is way different than UPS. We have earnings on this one into March. That's way out there. So anything on FDX? Not really. Okay. So that's kind of it. I mean, I'm kind of tapped out for earnings right now. I don't really like the other plays, so I'll stick to my guns with some exposure on Chubb, Progressive, Tesla, Meta, Microsoft, pending order on IBM. I have some trades on SkyWest as well. Visa, MasterCard I got out of. Intel I didn't really like. I think Intel has some promise, has some potential. The bull call spread's been profitable already. Man, it's like I would like to think that Intel has the ability to be a good stock medium term. But the only issue that I don't love is this. So it's not awesome from the Snowflake analysis side. Earnings forecast to grow, that's fine. Doesn't really detect any risks, but it doesn't check all the boxes. I'd like to see a little bit more green on here, kind of a more broad, broad value play, no dividends, financially healthy is minor. Past performance is pretty crappy. Future performance looks okay, and value is there. But maybe the best way to trade this one would be like look at that. Fair value says $1. What is up with that? right? Pure average. I mean, it's traded 1.6 with a pure average compared to Analog Devices, Texas Instruments, Marvel Technology, Micron. And I mean, you got to wonder, like, maybe the semiconductor space, maybe Intel is a little bit safer if SMH is going to look better. Maybe that's the easier play. Is we've got to see some resiliency in SMH in order for an Intel to look a little bit better. The play that I was considering would be a risk defined, maybe like a leap, where if I bought this cheap enough, maybe have a gap fill to the upside towards like 20. I mean, if we get to like $26, that's a good profit. If we get to $29, that's good profit. The way to trade this Intel, if I went out to January 2027, I'm essentially going to give it all this year, all next year. Does Intel have what it takes to do something good? I could buy a crazy deep in the money call, okay, and then sell against it. So if I bought like a $3 call and I pay $17.35 for it, my break even is going to be around $20, right? We're trading at $19.84, so I'm only paying about 50 cents extra in premium, but it's an expensive trade. I get it. But if this goes up at all, I could go out and sell against that. Let's say that I go out to 50 days or so. If I sell a $21 or $22 strike, that's a 37 delta. If I sell the 22, brings my debit down to 16. I would walk away with a few $100 on that trade. This isn't a bad trade. So if I did 3 plus 1605, get it called away at 22, I make $295 a contract. I mean, it's not a bad play. The concern is that this stock gets beat up even worse and doesn't really have any upside potential. But we're going back into 02 levels and 08 levels. So could it come back and be $14, $15? It can. Could it stop here and go up? It can. I mean, so I've got to be prepared, right? I've got to be prepared. Like if this is going to go lower, I've got to give myself enough time in the trade to maybe take one contract here and another one contract lower and play the game that way. Maybe I'm willing to put in a little bit more exposure to it. So maybe taking a one contract trade is fine. Make a few $100 if I'm right. If it comes down lower, then I will give myself hopefully enough time in the trade to turn it profitable. And also I can sell against it and lower my debit even further. So I don't mind this trade actually. So I think I'm going to I can at least get $1 here at the 22. I don't mind this trade. So I'm going to go out 3 by 22, 3 by 22, and hopefully get into this thing for like 16, 15 or less. So let's try 16. I'll try the mid price at 16.13. One contract is fine. Let me go. What's my max loss here? $1,600. I'm okay with that. All right, so that's my max loss. So 16.13 not filling. Let me try 16.15. Okay, 16.20 perhaps. $16.25. Don't let me chase this. Come on. $16.25 is right at the mid. You sons of bees. Now it's $16.08 mid. Come on, man. $16.26. Filled to $16.26. All right, it's not bad. I'm going to take this trade. So $16.26. Try to get filled on all my accounts here. Filled. 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 Okay. 5-1. This one's not too bad. Okay, I'm going to get that into my tracker here. So that is, keep going down, that is INTC. INTC, it's a diagonal spread. I'm doing the 1/15/27 expiration, $3 long call, and the 3/21 expiration, which is this near term, March 21st, $22 sell call. Cost me $16.26 debit. Break even price would be if Intel is at 1926, and if it gets called away at 22, I make 274 a contract. So it's a little income trade. If it goes down, then I'll just keep selling against it, trying to lower the cost basis a little bit further. Okay, so Intel does have earnings Thursday. If price drops a little bit, I'd be willing to take another stab at this trade at the $14 to $15 area. So I'm going to set a chart alarm around 15 bucks and just give it some time. But I'd be happy. I'm like, guys, I'm taking the trade. I'm going out 2 years, but realistically, I'm going out 2 years for my long exposure, but I'm selling against it like every 60 to 90 days. Okay. So based on this, technically, I like this trade. The question is as enticing as it is to say, okay, this is the bottom. Well, that might not be the bottom. So I'm giving myself time. If it goes up from here because we're coming back into these, I mean, look, these are pretty much crisis levels, like .com bubble to 2008 great financial crisis, lower than our lows in COVID, right? I mean, look at this thing during COVID, right? It's like this was our COVID trade in Intel, and it somehow dropped. So Intel has not really participated in this semiconductor hype and this AI play, and I'm surprised. Now, they might be, lagging behind Nvidia. They might be years behind, but if they have any competitive, uh, you know, moxie, they're going to try to do something to play in the space. So hopefully they can and will. And, maybe this thing goes back up to like 25 or 30 bucks and I make a few dollars. That's all I'm after. But the trade for me really is this. If we get back above $23 to the upside, then that's my profit. Actually $22. So if we're above 22 bucks, I'm going to get called away on my sell side, and I want to make sure that I exercise my long with that so I can get them off the table. But I make about just under $3 contract. Okay. All right. So that's a new trade on Intel. Not bad. Not bad. All right. So that one is in. Let's see liquidity levels on Starbucks. Let's have a look. Trading at 100 bucks, and we're sitting right at a big liquidity level at 100 bucks. So I don't see much on this one. Market makers would be actively defending 100 to 110. So Starbucks, did they have earnings already, or is it aftermarket today? Starbucks is aftermarket today. So yeah, I mean it's I'm not going to play a trade right now. Starbucks, really nice levels down here at 72. That was I did a ratio spread back in summer of last year, and that worked out pretty nicely. I was willing to own the shares, but didn't have to. So where do we go? I mean up or down, but liquidity levels for the short term, it's pretty much sitting at 100, which is my biggest level. So if it somehow pops up to like the 107 to 110 level, that's probably going to cap the move. If we go to the downside, I'd be interested in a higher IV and maybe looking at a ratio spread back on the low 70s. So if anybody is asking questions about this stuff, this software that I look at here, this is Dynamic Trend. I've got that Discord link in my affiliate discounts. They've got a pretty good annual sale with my promo code. It saves you like $1,700 or $700, something like that. So it's a pretty good deal if you want to look at volume, liquidity levels, build some option trades, craft your risk graphs and things like that. So I like it. You can plug it in right to your broker platform if you want to. I think they work with Tradier, TradeStation, and possibly a Thinkorswim broker as well, or that might be coming. But they have like a few brokers that they work with. They can plug right in. Otherwise, you can just get a data feed for it and get some real time data. But that is Dynamic Trend, and that's in my Discord affiliate discount section. So here is right there. So there's $700 off on my link. If you want QuoteStream Media, which is an aggregate feed, or TradeStation, Tradier, those are direct broker connections. Okay, so you can check that out on my Discord and click on those links if you're interested. Cool beans. All right. So no trade on Starbucks. Earnings coming out after market. What else is coming out after market today? Chubb, maybe. I'll watch that one after market as well. Let's take a look at some currencies. Okay, market's been a bit on the crazy side. Dollar today is up. So dollar today is up. I hope the dollar keeps falling a little bit lower. I really do, for the fact that I'd like to see the dollar and the 10-year yield go lower. So if the US dollar falls, okay, if the dollar falls, I still think a 106 or 105.50 is really strong support. I look for a buy opportunity on the dollar. There may not be a big trend here, but even coming down into some support, we go back into resistance, we could see a lot of indecision on the dollar. Dollar gets more painful if it goes higher. In here, the dollar can kind of stay range bound and not cause a lot of disruption in the markets. We don't really, tank the equities market. We don't see the yields going crazy. But this would be the spot that I'd be watching the closest on the dollar. Okay. Appreciate that, Papa John. Yeah, let's get some more thumbs up on this video today. So dollar is up a little bit today. Oil, right around that 200 moving average. Oil, your guess is as good as mine. There's clearly support. There's recent highs. Trump has been pretty vocal about driving energy prices lower. I think if he gets what he wants, then I wouldn't really touch oil. I wouldn't be long or short. I'm just going to stay out of it for right now. I'm still long on natural gas, which is getting its butt kicked. But this trade is also out to January 2027. So this is a bit of an inflationary play and a hedge. There's my trade on UNG. So my $23 call out to April, I might be able to collect most of that credit from it right now. In fact, let me see what that's trading for. If I go to UNG, right now my call is around 68% profit already. And if it gets up into the 90s, I'll just go ahead and take the profit and then do another sell against it. So I got into the trade for about 70 cents, and right now it's trading around 26 cents. So if I get down to, if I get like 85 to 90% of the max profit here, I'll just take it off and I'll just issue another trade. So that's how I manage stuff like that. But this one's out to January 2027. Gold, is gold going to be able to break the highs? Maybe. If gold breaks the highs, it's going to get a little bit more exciting, but that's probably also not a great sign for risk appetite either. It really isn't. So, I mean, same thing with gold. We might hit this high, get a topping pattern, range trade, and it's going to be a trader's market. I keep saying that. I'll probably have to repeat myself a lot this year because we're probably going to have that type of environment where we're not going to have blowout trends and blowout breakouts. It's just going to be a lot of this and a lot of broadening patterns and a lot of highs and lows and a lot of chop. But we got to figure out, are we interested in selling high or buying low? Obviously, for the stock market or certain trades, I'm looking to buy low. But I just don't want to sit here and chase all-time highs because I don't know if we're going to have that much momentum. So I think gold with a high bar count, I'd like to still see a pullback into equal lows of the 200 moving average or find some trend line support. I mean, look at all this support. Lots of support in here. It's right around the 200 moving average. So if we find support, then I'm way more interested in going long gold. If we break and go higher, fine. I'll enjoy the melt up like everyone else. But I'm not buying a ton at these levels. I've been scaling in since this breakout and adding more, adding to that breakout, waiting. I'm waiting. But gold still looks postured, very bullish. Can't deny it. Okay. All right, so that's gold. Silver hopefully is looking a little bit better. I'd like to see silver up into 32 plus. If this is a bullish pattern, I'd love to see silver make a run to a measure move at 36 and hopefully higher. Silver is one of my bigger plays this year. I've got a decent chunk, like anywhere between 5% allocated on gold and silver. So it's a pretty good allocation in the portfolio. It's diversified. It's not super volatile, but I like the measure move. So I'm playing silver. I did take a trade on silver today that expires at 5 p.m. That's going to be worth about $550. That was an SI trade. Got another one out here into March. Similar setup. So looking for profit there as well. SLV still have some shares. Looking to see if we get up into the 30s. Bitcoin, similar to what I talked about with a lot of things. Is it range bound? Yes, no, maybe. Right? Are we at the high? Are we at the low? Are we going to be bouncing back and forth? This would be a good spot to look to accumulate some Bitcoin. 90K. If we break and go lower, measure that move, and we fill in some of these liquidity levels, and then around 80K, I'd buy some more. I still like Bitcoin. It is still risk off. It's still risk on, risk off trading. It's not as correlated as it once was, because there's clearly been like a massive amount of inflows into it since the inception of those ETFs, but it's still very much sentiment driven. If we have risk appetite, Bitcoin's going to be fine. I don't think Bitcoin stands alone as like, oh, the S&P's down, the Nasdaq is down, the Dow's down, the Russell's down, Bitcoin's up. I don't think it happens that way. So I want to be careful, but I think be patient. I think we can come back into the same level and look at a retest of, same lows and offer some support. I like that opportunity to get repositioned. So I'll probably throw some more in there. If we come back lower, then same thing, probably area 1, area 2 on Bitcoin to buy some more. BITO, I just have I own some shares. I got rid of my diagonal spreads, took out my long calls. IBIT credit spreads, have some exposure, have a collar trade on it right now. FBTC, I close out those positions at the end of the year. BTC, MSTR, I still have a break even with a collar trade called away at 310. So I've got the 310 by 240 out to March. If it gets called away, I'm making around $30 a share, which isn't bad. Hopefully it's there. I don't know how much MSTR I'm going to be trading for the year, but I would think if we're high, low, lower, high, lower, low, I'm still going to work my cost basis down. I'd like to make, as much income. I'm not going to say like speculation trade here. If I own the shares, I sell a call, I buy a put. If price goes down, I make money because I'm protecting it. So I'm lowering my cost basis. Price goes up, it gets called away, and I cash it in. But I will not take this trade without any type of protection. This is a crazy volatile stock. There is going to be earnings on this as well coming out into early February, which will be next week. I do wonder, does this pop up on, like this type of earnings whispers? Is MicroStrategy even big enough? It should be. My gosh, it's a crazy volatile stock, and it's like 3 times the volatility of Bitcoin. So I'd be looking to see when this pops up on a earnings scanner. But that's next week. Okay, Coinbase. And I also wonder on MicroStrategy if the earnings is like, we bought more Bitcoin, and it's like, good for you guys, and the market goes up. But tech-wise, it's like MicroStrategy doesn't do anything good. They don't make any money. Their fundamentals are trash. That's the one thing that makes me nervous, which is why I don't want to have this thing without protection, right? Earnings are forecast to grow. Shareholders been substantially diluted, significant insider selling, volatile share price. All this has this future outlook. Everything else is crap. Okay. We've got price to earnings at 185 times price to sales. That's insane. Fair value is 124. That's awful, right? So Bitcoin has put this thing into a multiple that is probably not where it should be trading, but I'll take my chances. I think there's still really strong support here back in the low 200s if it does come down that low. But if Bitcoin stays resilient, as does the market, I would say through the first half of this year, as long as this market doesn't fall apart, MicroStrategy is going to be fine. But the premiums are obscenely good. If you are a seller of premium, it's pretty good. Francois, I put that trade in double up alerts for NVIDIA today. Coinbase, hanging in there with a couple of income trades. I've got February and April on that one. Ethereum, I'm out of Ethereum, except for I think I still have maybe a trade. EETH, where are you at? They're done. Okay, so I officially got out of EETH for profit. That would have been maybe the first week of January. So no longer trading EETH, which is an Ethereum play. Copper, I might look at copper futures in this zone here. Let me see if I can. I think I priced this one out before. $4 on copper. Let me look at copper futures. Copper futures. I might look at a trade like I did on silver futures. So I can go out to April, May of this year. So could I do something in a buy, sell, sell? It's a lot of buying power. Could I go down? Obviously, I want to get rid of some of that max risk. So could I go way down here to like 350? That's not bad. It's a big risk, though. I think this is why I didn't take the trade before, is the max loss is like really steep. So that trade is a debit. Let me see where I get my first credit. So that's a profit trap. 45, that gives me about $100 profit on this trade. 77% chance of profit, though. That's not that great. Okay. Delta-wise, mechanically, that's still pretty good. Let me move this one down a little bit further. Debit, debit, debit. Max loss. I mean, the loss is getting bigger. That's a little bit better. I mean, man, just the loss is too big. 86% chance of profit. It's, I don't know, too big of a loss. I think I'll look at copper down here. If copper is down at this area, I'm gonna look for it to bounce. I'll just trade it when it's much closer to the money. So I'm gonna see, do we get to 4001 or 401? Let me go to 401. So 401, and then look to buy. I just put on an option trade. Let me go 4015. Let me go 405, I guess. I just want a heads up. Okay, 4.05. There we go. So a little bit off of these lows. A little bit off the low, a little bit off the low. If we come down this level, then I can look at like a 111 trade and see if that thing bounces. So if this is a nice like wedge, and we're just going to consolidate and coil, I mean, copper could have a much bigger run later on. But again, with a lot of the assets I'm looking for, like if all this is going to do is consolidate, just don't be expecting some big moves, right? Eventually a bigger move and a bigger bull market may be at hand, but until then, it's just kind of stay out of the way, look for some income trades and define your risk. Okay. Japanese yen was up. Now it's back down. It's all been kind of flat. I do have a Japanese yen futures trader. I'm looking long the JPY out to September of this year. Nikkei is still chop suey. Nothing great there. FXY, I'm still long the Japanese yen through that. EWJ, still long the Nikkei. DXJ, no trade on that one. DAX is still climbing up towards highs, trying to. FTSE still doing pretty well. Argentina, I'd like to see a bit more of a pullback and try to get some of my 100 to 150. It's 100, 144, 200 moving averages. China's up a little bit today. This is Brazil. Brazil's actually looking pretty nice. I bought some shares on this one. I'm just going to hang in there and see what it does. Apple earnings tomorrow. Amazon earnings on February 6th, which is going to be next Thursday. So we've got some more Mag 7 next week. Amazon sitting at all-time highs. Not too bad. Not too bad at all. Google hanging in this choppy area. Any type of dip on Google, I'm going to look to buy it. So if Google comes down to the 200 moving average, I'm going to look at some income trades. I've got a bunch of income trades down here. I placed a lot of those trades when we were at this level. And then I was fortunate to get that crazy volatility on the quantum computing rumor that all of a sudden they're gonna crack the code in the next few years. But I've got some trades on Google there. But if we have any dips, I'm looking to add some exposure. If we have just upside potential, then we're probably going to be at all-time highs again. If the Google's going higher, if Apple's going higher, if Mag 7's going higher, it's hard for the market to not just go higher. And I know this crazy concentration is scary, and at some point it's gonna break. But if it doesn't break, it doesn't break. So price is still cautiously bullish and optimistic until it isn't. And we'll get some volatility. Meta's up to fresh highs. We got earnings on Thursday. Microsoft, same thing. A nice little rip to the upside after a decline yesterday. So really nice comeback there. I mean, literally in 2 days, we're closing that gap. Netflix, pretty much Netflix and chill right after earnings. I do have a broken wing butterfly up here that is out to, let me check that expiration. Netflix right there. Expiration is Feb 28. So I'm going out to the end of the month. So I'm going to wait on that one, but hopefully we stay out of the way, and that's a broken wing butterfly where I can make about $100. And if I get a profit trap, I make about $1,000. So let's find out. NVIDIA, nice little rip on NVIDIA. It's one of our bigger market movers today, 116 to 128. NVIDIA is up 8.82% from the open, but we had a wick lower as well. So from the retest of the lows, NVIDIA from low to high is up 10% on the day with over 8% to show for it, which is pretty good. Tesla, fractionally positive with earnings on Thursday. Berkshire coming snapping right back to those upside levels. Berkshire probably looks like this. A lot of range trading. So if it comes back down to lows, I'll place more trades like this. If it goes back up to highs, awesome. I'll just make money here. I'm not that interested in doing anything with it outside of finding the 200 moving average. Okay. Bonds, a little bit more green across the board. Funds rate, we know the Fed cut rates, 3-year, 2-year, 10-year. 10-year is only at 0.13%. I like red on the 10-year. I'd like to see if the 10-year can go down. If the 10-year goes down, does the US dollar go with it? If this goes down, does DXY go with it? Maybe. Hope so. Let's find out. Okay, a bunch of future stuff here. Currencies, some other stocks, advanced decline line, sectors. It's fine. All right, let me take a quick peek at currency strength today, then I'll let you go. I got a meeting in about 30 minutes. So dollar strength today, dollar CAD, Swiss on top. Here's yesterday's crazy move, JPY and Swiss on top. Fairly contained volatility-wise. We got Japanese yen and Aussie on the weak side today. Dollar a little bit stronger, but had a big pop during the. That's last night. That's like 6 p.m. Eastern time, and it just really didn't do anything for the entire day. So a little bit of strength coming into the fresh trading day, but the dollar basically went zero anywhere. And then CAD was about the same. Swiss was about the same. Really just hardly any movement except for a little bit of JPY volatility. JPY was the weakest, then came back to baseline, then back down to weakest. So, all right, just taking a look at things. Okay, that'll do it. I'll be back tomorrow. Daily profit play in the morning. YouTube sessions. I'll be back here at 3 p.m. for final hour. Let me see if I have any other stuff tomorrow. All good. Okay, so thanks for being here. If you're watching this thing live, if you're watching this on youtube.com/financial wars, kindly click the thumbs up button. If you like this content, subscribe to the channel. If you're watching this on my channel, youtube.com/Chris Pulver, same thing. Thumbs up, like the channel, subscribe if you want. I have a Telegram channel that you're all welcome to follow me on. I also have a Discord channel you're all welcome to follow me on. So I'll post that here in the chat. So Chris Pulver, free Telegram. There you go. So this is Chris Pulver Trading Telegram. There we go. And then my Discord channel as well. Invite. And we'll give this a 1-day expiration. So coming in hot. Chris Pulver Trading Discord. There you go. Okay. All right. So far, so good. Tomorrow we have earnings. It's Mag 7 aftermarket. We've got the Fed and the FOMC in the afternoon at 2 p.m. press conference 2:30. What they say, see if the market reacts to it. I would imagine that prices are going to be relatively calm in the morning, or at least really choppy, but we might have some sticky implied volatility because everything is based around the Fed. But if we get our trades in, reasonable like we would in daily profit play, then I'm looking to see if we can grab our profits in the next, 30, 60 minutes of the open. But this would be tomorrow's move. It's expected to be a pause. No major disruptions there. Probabilities, I'm not seeing a lot of shifting outside of now the market's looking at a slightly higher probability of cutting rates in October. So again, this is all the fun stuff about watching the Fed as they freaking change their ideas and the market prices and different things, but this is a nice way to watch it. So June, expected to be a 25 basis points cut, and now October, slightly higher probability. It's not a great probability, but we have a pause at 30% or another cut at 33%. Now, if that happens, cool. So we have one cut here and a second cut here for the year, but then nothing until basically December of 2026. So that is a long ways out between cuts. But that's what the market's anticipating. So we'll see what the language is tomorrow afternoon. I probably will have an FOMC session before I run into my final hour at 3 p.m. after maybe the press conference wraps up around 3 p.m. But I'll come in live and do my final hour. But I'm curious what Powell says, and we'll see what the market does reaction-wise. Okay, so all right, that'll do it. I'll see you tomorrow. Thanks for being here. Bye. See ya.